Hey, it's your favorite life insurance agent here. Today I'm going to be breaking down a little bit of why life insurance contracts are written the way they are and what it means to you. For more information on life insurance or how life insurance can fit into an overall overarching comprehensive financial plan, be sure to subscribe to my channel and hit the notification bell. That way you're notified immediately anytime I upload a video and you never miss one. So if you've ever looked at any kind of contract, the wording is weird. There's no getting around it. It's not the kind of language that you or I are going to use in everyday conversations, but there's a reason for that. Life insurance contracts are, first and foremost, a contract. They are a legally binding document. And because of that, they want to eliminate any ambiguity. They want to get rid of gray area. They want to make sure that everybody involved knows what is required of them, what is expected of the other side of the contract, and what it's going to mean in different scenarios and use cases. So they have to be very, very clear, very narrow, and very specific on what happens, when it happens, and where does it go. So that's why it's worded so strangely, and you have to take some time to really digest it. But it is definitely, definitely worth making sure that you understand what you're signing and what it means. It is a contract, it is a legally binding document, but if you think about it, a life insurance contract is actually really only a one sided obligation. Who has an obligation? Who has a requirement from a life insurance contract that they have to fulfill? It's the insurance company, it's not you. You are expected to pay your premiums. You are expected to pay for the coverage that you get. However, you're not required to. If you don't, well, if it's a term policy, policy just lapses. If it's a permanent policy, it can start to, if you have a policy loan payment, it can eat through the cash value of the policy to keep the policy in force, or it can lapse as well. Point being, though, you don't technically have an obligation from a life insurance contract. Now, you can let it go, and then the contract goes away, but you are not obligated to do anything. The insurance company, on the other hand, is obligated. They are required by law. If X, Y, and Z happen, they are required to do this. If the policy is in force and an insured event happens, whether it is a long-term care incident or a death or another major injury from which you might be able to take some payment from the policy, they are legally required. As long as it fits the terms listed in the contract, they are legally required to make that payment. They have to. That's the obligation, but it is a one-sided obligation. They are required. You are not. If you've got questions on what it says in a life insurance contract, why does it say that? What does this mean? Drop me a comment down below. I'd love to know what you guys have questions on. It helps me make more videos and it gets me making sure that I'm answering the questions that you guys have. If you liked this video, if you thought it was good information or it helped you understand things a little bit better, hit the thumbs up button. Lets me know I'm doing a good job, lets YouTube know I'm doing a good job, and it just makes everybody happy. Most importantly, though, if what we were talking about today is something that you want to go over and you want to figure out a life insurance contract that is right for you in your situation, there's a link in the description below where you can apply to become my client. Click it, check it out. We'll do some fact finding, and then you and I sit down and we figure out what works for you in your situation. Right? Please make sure you take care of your now, your future, and beyond. Thanks for watching.